Hello, and welcome to the latest edition of the Financial Intelligence Podcast. I am your host, Eric Demers, and I'm thrilled to be joined with Anthony today from the UnBankers. Anthony, please introduce yourself and welcome to the show.
Thanks, Eric. Pleasure to be here today. So I am Anthony D. Almeida. I'm the CEO founder of a financial advisory firm called the UnBankers. We've been around for a long time, and we basically support small mid-market companies in the US and Canada who are seeking debt capital, anywhere from $1 million to $100 million, anything in between. And we have bought, sold businesses ourselves and startups, you name it. So we're very well versed in operating a business as well as financing that business.
I love that model. You're in a unique spot in the market where there aren't a lot of great options for entrepreneurs who are looking for capital. I would say less than $20 million. I know you do up to $100 million, but that spot between single millions to tens of millions. There's not a lot of players in that space. So tell me what focused and what brought you into the lending in that area.
Well, we had noticed it for quite some time. It really sort of manifested itself more around the pandemic. But we had been seeing a trend for years where you've got, the big banks that we all know and have heard of. They love, financing companies, but they love bigger transactions because it's the same amount of work to do a $10 million loan or a $20 million loan as it is to do a $2 million loan. So why wouldn't they do the bigger ones? So that kind of opened up the market for us. And we really identified that there were a lot of companies in that small mid-market space that don't need 20 million. Well, they may need it at some point, but they don't need it right away. So who's there to help them? Who's there to get them that money? And that's where we really found this gap in the market. And so we've really focused a lot on that sub $10 million space where there's companies that are growing. They need $4 million, $6 million, $8 million. They've got contracts coming in. They need to fulfill those contracts. They need to mobilize. They need staff. And there are a lot of lenders out there that will finance these, but most people don't know who they are. Most business owners don't know how to find them. So that's how we've been growing our business.
That's great. Now you're able to connect those entrepreneurs and businesses with the appropriate, lenders, parties who are able to fulfill that type of, loan and structure investment. Having known a lot of companies in that space, there's a lot of great companies who are have a great business and, they would want to invest in, except maybe their growth trajectory or their current, revenue run rate doesn't support a $25+ million investment. Right. And so it's hard for them. They're stuck. And they're like, well, what's wrong with my business? My business is great, except I don't meet your minimum criteria. And then they don't know where to go next. Right. So I think it's a difficult position for them to be in. So I love the fact that you guys have built an approach in order to connect that ecosystem up in order to help find that funding that might actually help them advance their business. So tell me a bit more about how you guys are going to market today, and are you focused exclusively in a certain geography, or are you open more globally? And just tell us a bit more about how you go to market.
Sure. We started in Canada years ago because a lot of my customer base and clients and everything were in Canada. We grew into the US about 10 years ago. So we really do focus on the US and Canada, but we have worked on projects from the UK, from Europe, some in Asia, some in Australia. So really it's global for us, but a lot of our lending partners are in the US and Canada. So what we've really noticed over the past 10, 12 years as social media has become more popular, online marketing and everything, really anywhere in the world, anywhere where an internet, signal can reach you, it's an open market for us. Company is a company, businesses are businesses, and the psychology around running a business is the same no matter where you go. So we're happy to look outside of North America, very happy, but we have obviously a big stronghold in North America.
Yeah, that makes a lot of sense. The North American market is really strong globally. Makes a lot of those, no shortage of companies who are participating in this geography. So a lot of opportunity there for you to work with potential customers. But as you said, it's a global market today, right? So there's opportunities literally everywhere the fact that we can be connected on such a fast, immediate spot around the world allows you to be able to do that if you guys are, choosing to do so, which sounds like you are, which I love those opportunities come up. So, as we start to move forward here, one of the things that we talk a lot about on this podcast and a lot of others in the market right now is, how the market is evolving so quickly with the advent of AI and AI technologies and just the word AI. And I feel like in every sentence that comes up, I'm sure you see it as well in your business, both in terms of your own execution of your business, and then probably just as importantly, with those that you partner with and those that you potentially, work with in the market. So tell me a bit more about, how AI is influencing your market position and maybe in your business today from what you're seeing.
Absolutely. Well, as you would know as well, because you are a longtime entrepreneur, I believe, and you've run multiple businesses and you've exited and so on. So you understand that change is inevitable, right? Change happens whether we like it or not. And some things we can predict and some things are thrust upon us. And I think AI was one of those things that everybody knew it was coming. Everybody kind of had it, before it was AI, it was called machine learning, I think, right? Isn't that what they kind of started off with? It was machine learning. And then it kind of morphed into, oh, everything is AI now. So I kind of shied away from it in the beginning because I wasn't sure. It was kind of like crypto or something else where you don't really understand it. So you kind of step back and you kind of wait to see how the dust settles. But it was thrust upon us when we started to have business owners who were now had contracts that were related to AI, whether it was data centers, whether it was power generation, anything like that that is may not be directly related to AI, but it is a supportive service for AI. Because as we know, the electricity needed to process this is immense. And so what we noticed was a lot of businesses now were providing, whether it be software or HVAC services, construction projects. A lot of them now are related to AI, whether it's processing centers, power centers, and that sort of a thing. So we noticed that that was a natural progression that happened just over a short period of time, but it happened and we couldn't really predict it, when it sort of came in. But then on our side, with the actual use of AI in our business, I was hesitant for quite some time. And my chief marketing officer kept pushing it on me, saying, listen, you got to start paying attention to this. And I am okay with change. But if you're in the middle of something and you're on a train and it's going at 100 miles an hour and you don't really want to stop and do anything, you just want to keep going, sometimes it just gets hit. You just get hit with it, right? And it's like, okay, well, now you're forced to. So about 12 months ago, I was forced to really start paying attention to it. And I'm glad I did because it has taken so much weight off of my shoulders, just for me personally, but also my team, where AI has really become part of our business. It's a function of how we operate. Parts of our business now are offloaded to AI, which is just, that's just scratching the surface because I know AI is so much more than that. But in our business in the last 12 months, that's really what I've noticed.
You're right. And it's been the last 12 months have seen a significant ramp and acceleration across the market for AI. And I think to your point, I talk to a lot of, financial tech and healthcare tech leaders who have both probably had a similar path trajectory as how you described it. They've been looking at it for a while. They've seen it in the markets coming and they're starting to figure out how they want to engage. And then it starts to accelerate around them. And then I also know at the same time, we need to be leveraging it ourselves in order to both be better as an organization and be able to work better with our clients. And I find in highly regulated environments, people tend to be a little, they'll say patient because they want to make sure that they're not stepping into something that's not going to be secure and meet their requirements that they need for their markets, right? So when you get into, finance and healthcare in particular, just because of the security and the sensitivity around all the information, it's very normal and for those types of companies and customers to take a, measured approach. But what we've seen over the last 12 months is that there's a lot of great applications and uses for the AI and within those environments to help those markets really start to accelerate. And I've seen it, just talking to other organizations. Some of the stuff that they're doing today is it's mind blowing, to be honest. In some cases, the things that we're able to do to accelerate and save time, accelerate deals, accelerate opportunities in the market. It's really interesting, right? And I see there's so much, ecosystem opportunity within your own, customer base in order to help accelerate that. And I guess a question I would wonder, and then this is more of my own, questioning here, is when you're looking at companies who are looking to take on, lending, need money, et cetera. Is AI an area of questioning in terms of how are you using it? What's your business model? Are you engaging in it today? And I ask that because I've heard from others in the private equity world and in others I speak to on a regular basis that some of their investment criteria at the very top is you and AI are using AI, you're leveraging AI, you have an AI business model. And if they don't, they may be shying away from investing in those businesses.
That's a really good question. And I haven't seen too much of that yet when it comes to the underwriting of a business, whether they are heavily invested in it or only kind of partially dip their toe in the water. We haven't seen that much yet, but I have a feeling that it is coming because we can't escape it now. And AI is pretty much been a part of our life for longer than we even know it has been. It's just now it's just more prominently discussed. So it has not yet come up in a lot of the requests, the finance requests that we are working on, and the lenders haven't brought it up too much yet. But again, to your point, I think they're still trying to navigate themselves and trying to determine how they would grade and score a business if they were using a lot of AI or just a little bit of AI or what that looks like. So it still is very much in the pioneering stage. I think it is. You have a lot more experience in this area, and I've just recently heard the word super AI, and that is obviously very different than the AI that I assume is out there. So I think, and you mentioned it before, some are hesitant and they want to make sure that they understand it fully before they, dig right in, especially when it comes to lending, because, again, you brought up that there's privacy issues, there's regulations, there's all these things. And until you really can have control over it, you're going to be very, very careful with it. So not quite yet. We're not seeing it as one of the underwriting criteria per se, but I have a feeling it's coming for sure.
Yeah. And I think it starts in as we move from private lending markets to, more, banks and commercial lending markets in terms of how they approach it. I know starting a couple of years ago, a lot of the private equity and venture capital investors were very much starting to focus on, are you using AI as your part of your business, and then including it in their investment thesis? Now, not every firm, but it was starting to see a trend growing there. And then talking to some of the founders and fintech leaders I've spoken to recently, there's definitely tools and assets that are moving into the commercial fintech market to help them with their business, which naturally means or feels like there's going to be an acceleration towards incorporating them into their, underwriting process as they go forward here. Doesn't mean that they're not going to invest in companies who aren't using AI. No, but I think it's you're starting to see it as part of the nomenclature that's coming on board with everything that they do going forward. So I think
Sure.
it's an interesting time in the market. I think there's going to be, rapid change in all markets as we go forward, but it's an exciting time as well in terms of the opportunities to really do a whole lot more, accelerate your business, and potentially provide more options to people in the market than you might even be able to provide today, because you'll learn new things as you go forward from a lending perspective as well.
Absolutely. And when it comes to investing in or lending to businesses, AI is already, I know it's already doing this because we do this with our own businesses. So if we're doing it, lenders must be doing it too. But there's a lot of time that's spent on underwriting due diligence of a file, whether it's a debt request or equity, right? And I know private equity firms are courting this concept and trying to figure out how can we use AI to our advantage to speed up this process, because honestly, we both know that there's no shortage of businesses looking for money, whether it's equity or debt, right? And so how can you filter through those quickly and get to the ones that make the most sense? And that is where AI is assisting now without, breaching any sort of a privacy issue or any regulatory issues that may come up. You can do that without, breaching any of those currently. And I know AI is already helping firms do that. It's doing it for us.
100%. There's a great opportunity there to start to filter out the noise a little bit, we call it that, and then start to connect the right lenders with the right organizations that fit their model,
Yeah,
and and be able to do that in an automated AI systematic way, as opposed to the older days where there's a lot that went into trying to find, I should say, and then connect with people
yeah,
in order
yeah.
to get to that next step. Yeah, hopefully we can accelerate that path for a lot of people. Well, that's
Well,
it's a great. Go ahead, Nancy.
yeah, no, I was just going to say, one of the things that both, equity investors and sort of debt providers will sometimes look at, but they should look at a lot deeper is the management, the actual people themselves, and how can you do that unless you've got something that can assist you in doing that, whether that's background checks, criminal, even social media, finding out how people behave online. It says a lot about who they are, right? And so without AI, it would take forever to do that. And I think we're starting to see that more as well.
Yeah, there's having run several companies, so like yourself, is the management team is super important to your success and the story, right? Making sure that you're investing in a solid team that is moving in the right direction, aligns with your values. I think there's a lot that can be, gleaned and captured by using AI to see how we do match up. It's not an inclusion or exclusion opportunity necessarily, but I think it's super helpful to be able to accelerate some of that learning. And there's a big due diligence phase that often goes on in all these deals historically. So if you can shorten a due diligence timeline in order to get to money faster, well, that's a benefit to everyone, because typically the companies need the money way before they get the money. And the lenders, it's to their best interest to put their money to work, right? So the faster it's going to work, the better for everyone. So that process, being able to limit, reduce that length of that process would be invaluable to all sides. So I agree with you. There's a lot of opportunity there to recapture AI. So tell me what's exciting about the UnBankers this year and going forward. What's your vision for the 2026? And we're still pretty early in the year.
Yeah. Well, we've really ramped up our messaging when it comes to connecting directly with entrepreneurs and business owners, founders, even sort of next stage growth opportunities. Um, we're a little bit different than our competitors in the fact that we've actually operated, bought, sold businesses, many ourselves. Our entire core team, our C-suite are all entrepreneurs at heart. We've done a lot of that in the past. And so what we've really been doing is focusing, honing in on who our exact client is and who we want to support the most. Because again, there's so much noise out there. There's no shortage of businesses looking for money, and there's only so much that we can do in a day and in a week and in a month. So we've really spent a lot of time with our messaging to really pinpoint and to try and hook the right people who can resonate with our message and who understand it and who can say to themselves, well, you know what, I need this money. Who can do this for us? These guys seem like the right ones because they understand what I'm going through. So that's one thing that we've been really focusing on since the beginning of the year, especially. The other thing is, as much as we love working with lender partners, and we have 652 now lender partners, that it's taken us 25 years to build this Rolodex of lender partners.
Great
We're
network.
very, very proud of that. But we also identify that there are still a few gaps. There may be that many lenders, but a lot of them still kind of lend to the same kind of business and the same kind of categories and criteria. And so there are some gaps in there. And so our real focus over the next 24 months is to lend our own money, because we, using AI, coincidentally enough, have built some software and some systems internally where we've identified opportunities and gaps that we can fill ourselves. So we would rather take a look at it with our own lens and say, hey, can we do this ourselves? Do we want to do this ourselves? If we do, then let's do it ourselves. So let's go in with a couple of lenders we know. Let's do some club deals. or doesn't fit for us, and we'll just send it off to our lender partners still, and everybody's happy, everybody gets fed. But that's a big focus for us this year, is honing that message, making sure that the right people see us and know that they can reach us, and then seeing how we can benefit them directly, and which then makes it quicker for us, because if we can underwrite it ourselves in-house and we can fund it ourselves in-house, well, then it's just so much quicker. So really, at the end of the day, you're providing a much faster service to that business owner who needs the money yesterday, like you said, right? They always need it yesterday, and they never really get to, yeah, that's right. So that's really it's a really big focus for us, is let's fund these businesses ourselves if we can this year.
That it would actually, you're cutting out a bit of a couple of layers of in order to make funds flow, which is great. Time to market, time to fund in this case would be accelerated. Now that you're looking at those as a both direct opportunity as well as using partners, from a direct opportunity, funding yourselves, have you determined, is there like a certain check size, limit size, up to size that you would feel comfortable with at this point, or is that to be determined still?
No, we've been finalizing those points now, so I can give you sort of a range. It's not fully launched yet, but it would be in the range of 2 to 7 million. That's kind of the check size we like, only because that is where there's the most opportunity for growth. And if they're at that point where they need $2 or $3 or $5 million, well, then we know they're going to continue to grow likely, and they're big enough where, if with a few tweaks and some 15 to 20% growth, we'll be able to take them to a bank after and take us out. So really, we're a short-term option. We want to be 18, 24 months max. We want to be in there just to fill the gap. Like, you couldn't quite fit for the bank, or it was a little too small for the bank. They weren't interested, or just, they're tight when the credit box just didn't fit. So let's come in, let's do it. Let's get you to the point where ABC Bank will come and take us out in 18 months or 24 months. And so we think that check size is the right size, because then it puts us dealing with the right business that's going to continue to grow and will easily be able to be taken out by a bank later.
Yeah, no, I totally agree. And I know a lot of organizations who are in that space in terms of where they are in the growth trajectory. They're not quite at that next step yet. They're trying to accelerate their business and accelerate their revenue, but they usually need revenue to accelerate their revenue. And it's a challenge, right? So they look at an 18 to 24 month window. And if they had a little extra capital to do a few more things that they're trying to do in their business, they would probably knock it out of the park. But then they can't necessarily find that in order to, help accelerate that. So now they have to slow down the momentum a little bit. And so then no one's happy about that on the investor side. So it's a real problem in the market. And I appreciate the fact that you guys have identified that as an area maybe of investment opportunity, because you're completely right. There's a lot of great companies who are growing. They have a good trajectory. They would like to grow a little faster. And then once they do, they would be over that next step and eligible for additional, opportunities from additional lenders of size who might want to then take on that current investment or take you out of that investment necessarily, and add to put their own money in to grow forward.
Right. And typically you're gonna, when you're at that level, or when you get to that level in your business, there's going to be some changeover in the C-suite. Usually there is, right? You've never had a CFO before. Now you have a CFO, likely, or at least a fractional one. Maybe your CEO has changed, because, as we both know, being in business a long time, running our own businesses, you get to a certain point where maybe you don't want to be the CEO anymore. You recognize that we're going to get to 100 million in revenue. It's not me. It's going to be somebody else we bring in. So those changes happen around this time too. So we want to be around kind of at the right time, and that seems to be the right.
No, I totally agree. I mean, there's a lot of businesses where the founders have a great, build a great business. They bring it to a certain point, but then the requirement to build to that next level after you've taken on investment, whatever that level may be, they might, even the founders look at it and say, I want this to be successful because we want my investment to grow. So it makes sense for us to bring in someone who's grown that business before, so I don't have to try to figure it out along the way.
Exactly.
Not that they can't, but they can. There's an acceleration path. There's a timeline they want to achieve. So it makes a lot of sense to bring folks like us in to do that at that point.
Absolutely, absolutely. And we have a corral of, or I guess a stable of really solid executives that, if need be, we can support that as well. Hey, we're not just the funder, we're not just providing the money and stepping away. We're there to hold your hand if you need help, because really, that's the kind of thing that a bank really can't do. They're not allowed to do, but we're private, we can do that. So here's the 6 million you need, and what's your rollout of this capital, and what's your strategy, and how long is it going to take, and do you need help? If you need help, let's come in and help you do that as well. We want to see people successful because it just makes it easier for us to get our money back, lend it to somebody else,
100%.
and rinse and repeat.
Yeah, everyone, there's aligned incentives. Everyone for success there. If they're successful, you're successful, and everyone's happy.
Exactly.
So this has been great. This has been a great conversation, Anthony. I really appreciate you talking about your business model, what you guys are doing, where you fit in the market. I think it's a great area. I've talked to you about this before, even before this podcast. And it's an underserved market, one that definitely people like companies like yourself and the UnBankers in this space to help all these great organizations get over that next hump, get over that next level in order to take that step forward. So I think there's a great opportunity here. So this has been great. Appreciate that. So before we sign off, Dave, I always like to ask you, tell everyone where they can find you and find your organization in order to reach out.
Sure. So our website is www.theunbankers.com. I am very active on LinkedIn, on Instagram, Facebook. I think we have a Twitter account, or sorry, X account. I don't know why I said Twitter. It's just,
Everyone, Twitter and
yeah,
X.
yeah. We're pretty easy to find. There's no other company out there called the UnBankers. So if you Google the UnBankers, you should be able to find us as well. Yeah, that's how you find us: website,
Love it.
LinkedIn, and social media.
Well, yeah, for all those listening out there, if this is something of need for your business, definitely reach out to Anthony and his company. I think they'd be a great discussion and potential partner for you. So thanks, Anthony. I love this. It was a good conversation, and wish you guys well.
Thank you, Eric. Nice to chat again. Take care. Okay.
The wordiest one is always it, right?